G'day and welcome to this week's video. This week we're going to have a chat about the biggest company in the world, and that is Apple. Now Apple is worth around $830 billion, making it the largest business in the world by a fair margin. And overnight they released their previous quarter earnings, which provide some really positive results in some really important sectors of their product suite. And we'll have a look at those in a second. But the jump overnight saw the share price jump between 6 and 7%, which equated to just over $48 billion. And I went through and had a look at the top 20 stocks on the Australian share market and looked at the valuations of those individual companies. And with our top 20, there's only 8 businesses that have a market cap that is actually bigger than $48 billion. So apart from 8 businesses that are currently trading on the Australian stock market, Apple's lift in share price in one day's trade was more than the valuation of all the other companies that are listed on the Australian Stock Exchange. So quite an incredible result. And it just shows that there may be belief that there's a cap and a ceiling to how big these companies can get, and it just proves continually that there's not. There's no limit to the upside, and it's all based on the amount of earnings and profit that comes through from the business. So it might be worth us having a bit of a look at the breakdown of how the business has gone, where it's received its income from. So these are the numbers. So we've got obviously the areas of obviously the Americas, Europe, China, Japan. But what impressed the market is the figures down here. We're looking at the product summaries. So iPhone sales here was 41,000 units, and that's an increase of 3% or 2% in actually product sales. In revenue it's up 3%. But what's impressed the market is the services. So the services side of the product that they sell is all about the digital content. So it's about when we go into iTunes, we've purchased some music, we've purchased a book or movies, whatever it is. Sales in that segment are increasing, and this just firms our belief that when you're constantly investing and buying these products, the chances of Apple users moving from that space, because we've already invested so much money into all these products we've bought via their service offerings, and that might be Apple TV and those types of products that they give us. The chances of us moving, given we've already spent money into that area over many years, is very low. So it sort of really binds us in to the product, let alone the fact that much of my family's photos and videos are placed on my my Apple iPhone. So between the combination of those two, the moat, or it makes it very hard to replicate and compete against a business like this. I'm highly unlikely to move from an Apple, and it's something that we've covered off before. But all of a sudden, the service side of their business from their digital products are really kicking up, and it grew by 22% per year. The other products, which looks at Beats and accessories, I think Apple TVs within that, is up 23%. So these are huge numbers. So a great result for Apple and for Apple shareholders. Thank you very much for listening. Please subscribe to the channel if you like it, and give us a thumbs up. That'd be appreciated. And we'll catch you next week. Thank you for listening. Bye.